Netflix top at earnings expectations for the first quarter. The streaming giant also maintaining its 2025 revenue forecast. For more on the road ahead for Netflix, let's get to Bloomberg Intelligence senior media analyst Geetha Ranganathan. Geetha, it is good to see you on the show as always. So Netflix reports, Geetha, stock is up now 4.5% in the after hours. But walk us through your reaction to the results. What do you make of the print?
Yeah, thank you so much, Josh. So this is the first time that Netflix has actually not reported any subscriber numbers, which is really, very, very different, feels very different. But financial targets came in well above expectations. This was really, again, one of their blockbuster quarters, I would say, because one of the things we were thinking about, as we kind of approached this quarter was they did have a lot of price hikes that were implemented in January. And so the concern was whether there would be a revenue slowdown if people were in fact churning and canceling subscriptions. But looks like revenue growth actually came in higher than expected. So that's pretty good news. And what they said is that they're actually implementing more price hikes. I think they mentioned France and some other markets. So again, gives you confidence in kind of their pricing power and their strategy going forward. And again, if you look at some of the guidance that they've issued for revenue growth in Q2, again, more than 15% growth, really strong. And then they reaffirmed full year financial targets, which, in this environment with so much of uncertainty, with an impending recession is really, really good news and just gives you a lot of confidence in the momentum and the way that the management team is executing.
So obviously a great quarter when it comes to continuing to raise prices. Any perspective on how the advertising segment of their revenue is going?
Yeah, so they did say that they've taken a lot of steps. Advertising is still a very, very nascent business for them, but they are taking steps to ramp that business up pretty significantly. So the targets for this year is that they are going to double their revenue from last year, which we estimate was about 1.2 to 1.5 billion. But more importantly is the fact that they've actually laid out targets in a 5-year plan. So for 2030. They expect to hit $9 billion in advertising revenue, which would be almost 12% of their total revenue, up from about 3 to 4% today. So advertising is definitely going to become a more and more important part of the whole, Netflix business model. They're doing a lot of different things to really build the business. So one is investing in programming that really plays well to advertising. So you talk about sports, you talk about live content like WWE Raw, like some of those NFL games, and they're investing in that, and they're going to continue to do that, I think, in a pretty big way. And then the other thing is really kind of building their own infrastructure. So on April 1st, they actually launched their own Netflix ad exchange within the US, and that's going to help them sell more ads and do it in a very, very efficient way as they improve and open up their ad inventory across to many, many different platforms. So they're really taking steps to build the business, and I think it's going to become a major revenue driver starting in 2026.
Geetha, if we were to see a material economic slowdown in the US, how would that impact Netflix? We've had some analysts come on, Geetha, and suggest that if that were to happen, they would see Netflix as a kind of relative defensive play, relative safe haven, but how do you see it?
I see it exactly the same way. I think Netflix actually benefits because just think of it, Josh, if you're not going to go on that expensive vacation, what is your alternative? You're going to have a staycation. What are you going to do? You're going to watch more Netflix. So if you really look at Netflix as a form of entertainment and compare it, just think of a movie ticket. The price of a movie ticket in New York today is like $20, $25 for one person for entertainment for about 2 hours. With Netflix, you're either paying $18 or $25 without ads for a whole family for a whole month. So this is really one of your cheapest forms of entertainment. And we've seen time and time again that in a recessionary environment, people actually consume more streaming content. They consume more TV content. So we actually think Netflix is well positioned should we get into like an economic downturn or a recession.
Obviously, with the beat, the top line is continuing to power the earnings forward. Any perspective on the spend related to content, particularly as they're bringing on some of these, higher ticket live events in the coming months and years?
Absolutely. So yes, you're absolutely right. That top line is going to be growing double digits, probably, almost 12 to 15% this year. The idea with the whole operating leverage in the Netflix model is, yes, the top line grows. Yes, content spend will also grow, but content spend is going to grow less at a lesser rate than the top line, which is what gives you the operating leverage, which is what takes us to margins, expanding margins. We know that last year Netflix expanded margins by 600 basis points to 27%. This year they've reaffirmed their target for 29%. But if you just look at the 2Q guide, for instance, it's 33%. I mean, this really speaks to the amount of control that they have in terms of costs. So yes, they're going to spend, but it's still going to be very, very disciplined and in a very, very focused way, so that they're still able to have a lot of leverage in terms of pushing up that operating margin.
Geetha, the Journal reported leaked targets from the company, which were impressive, including, they said, 110 million net ads over the next 5 years. What did you make of that, Geetha? And where would those kind of net ads come from? Would that be ad-free, ad-supported, certain regions? Where would you be looking for the growth?
Yeah, absolutely. Netflix kind of giving those numbers just tells us that they still do see a lot of runway when it comes to subscriber growth. So right now we know that they have well over 300 million subscribers, but they've identified a global opportunity, Josh, of 750 million broadband households. So they obviously still have a long way to go. And just the fact that they gave us that 410 million obviously suggests that they think they can easily get about 18 to 20 million new subscriptions every year. Now, you look at even a market like the United States, this is a very, very highly penetrated, highly saturated market. But even in the US, last year, Netflix actually added 10 million new subscriptions. So, they're using different combinations of strategies. Who knows, maybe they introduce more different tiers coming in at different, price points, appealing to different segments of the population. But yes, if you just kind of look at it from a global perspective, we're going to see growth coming more from, I think, the Asia Pacific region, where penetration is generally a little bit low for Netflix, more from EMEA, where again, also penetration is a little bit low versus the US, which is almost at about 65%. So it's going to be pretty balanced, I think, across the globe.
Geetha, always a pleasure to have you on the show. Thank you so much for joining us and for that instant analysis and reaction. We appreciate it.
Thank you.